Hey everyone, this is Kirk here again at optionalpha.com, where we show you how to make smarter trades. And in tonight's video, I want to cover the trades that we made yesterday for March 11th. I didn't have a chance to get this video out last night because we had the group coaching webinar. So I apologize for that, but I'm getting it out early this morning so that it's posted right after the market opens here. So we did have two closing trades yesterday and then one new opening trade. So let's actually cover the opening trade in GLD first. Saw an opportunity yesterday as gold, obviously, we know has had a really rough time this last week and obviously this week. And as a result, implied volatility in gold has gone above the 50th percentile. So that gives us an opportunity to do an iron condor in GLD. And we did it in April. So we're going out to April. We're doing the 116, 117 call spread. So we're selling the 116, buying the 117. And on the put side, we're doing the 105, 104 put spread. Again, selling the 105 and buying the 104, creating a very balanced and even iron condor and taking in a nice credit of about 30 cents. Now, we're definitely leaving some room on the table to add to this position if the market for implied volatility in GLD continues to move higher. So you can see that we've had definitely a nice run up in implied volatility here, and it's sitting right above that 50th percentile, but that doesn't mean that it's peaked, right? Because it can go much higher than this. So we're entering a small position now, but if we need to, we can actually add or stack or ladder this position later on in this month, okay? So implied volatility, very good in GLD. When we look at our profit and loss diagram, and we'll take off the March position that we currently have, this is what it looks like. So very even and balanced iron condor right over the market. See that GLD is trading right here about 111, and our call spread is up here at 116, 117, and the put spread at 105, 104. So you can see very balanced and even over the market, and that's what we like to see. Good risk reward on this trade, good pricing, GLD's very liquid, and so we obviously didn't have any trouble getting into this position. Two trades that we closed out of yesterday. The first one is Solar City. So we intended on holding this one a little bit longer, but at the end of the day, when you sit down and think about it, the stock moved exactly where we wanted it to. We had originally traded this put calendar spread, anticipating that Solar City would continue to move down towards $50, which is where our strikes are centered, right around 50. And that's exactly what happened. So as a result, implied volatility has increased just a little bit. The stock has moved exactly where we wanted it to. We're getting closer to expiration, which helps with the decay in these calendars. And so we were able to take a nice $55 profit on this trade, made 55% gain on our trade in a couple weeks. So again, you can't really argue with that. You just got to take money off the table. With Solar City, this is what it looked like chart-wise. So you can see we had originally traded this right after Solar City had announced earnings, so right in this time frame, we anticipated that it could move down as it headed towards expiration. Kind of after the earnings move, we thought maybe, you know what, the stock may continue to move in the direction that it gapped after earnings. And as a result, we also saw a slight increase in implied volatility. So IV was really, really low for Solar City when we entered this trade, well below the 9th percentile. It's only increased a little bit. It's still very, very low, but that just marginal increase in implied volatility really helped this position kind of mature into a nice, decent profit. The other trade that we got out of today was another calendar spread as well. These have worked out pretty good for us. We were probably one of the only people out there trading Apple to the downside right before things really turned over in the last 2 weeks. So we've had this position on for, I think, over 2 weeks now, and we're trying to target Apple around the 120 put strike. It didn't get all the way there, but it had a nice move down, and implied volatility started to move up as well. This allowed us, again, to sell this thing back for $216 credit, banking a nice $56 profit on this trade as well. So when we look at a chart of Apple, you can see we were probably one of the very few that were out there that were actually playing this thing to the downside. And so it didn't get all the way to our short strike here at 120, but this calendar actually covers April and May. So this move happened very early in the cycle. So we're going to take advantage of it by taking money off the table at this point, not trying to wait all the way through May and assume that Apple just trades exactly sideways. That's kind of our risk here, is that if we hold on to the position, we're basically assuming Apple trades sideways for the next month and a half. I very much doubt that's going to happen. Apple's going to do something, either continue to sell off or rally up from here. So at this point, it moved very quickly into our profit zone, and we just need to take money off the table and be diligent about that. So as always, I hope you guys enjoy these videos. If you have any comments or questions, please add them right below. If you're watching this video somewhere else out there online or on YouTube, you just have to understand that these videos and these trade alerts that you're getting and seeing right now are about 15 to 20 days after they're sent out to our members. So if you want real-time alerts in this video that accompanies those alerts every single night, you've got to sign up for a membership at optionalpha.com. Until next time, happy trading.